Good morning, everyone. Paul here with GammaEdge. Today is Wednesday, the 13th of April. Go ahead, pause it here. Make sure you read this. Pretty important. Taking a look at the overall indices, red lights across the board. We're seeing a continuation of puts being added and calls being removed. Here's the SPX compared to yesterday. Here's the SPY compared to yesterday. Note, we didn't really see much of a change on the call side, but we did see the put side continue to grow on these. They're well hedged. A lot of downside protection being put in place. I'm not expecting any huge fireworks to the downside. I'm just expecting a slow grind to the downside. Taking a look here at the Qs as well as IWM, more of the same. We're seeing more net negative cumulative GEX here on the Qs with a reduction in the positive cumulative GEX. And here on IWM, you can see we've got more additional net negative coming in here, but no real change on the call side. So again, this is such a low level. There's just no upside that people are anticipating. We'll note, though, for IWM, you can see that price is actually above the net negative dominance here, and that actually is very, very interesting. Not that that's changed a lot, but as we start drifting away from that, it could portend a sea change. Nevertheless, previous slide, this slide, both are red lights. Just ugly market for swing traders. Taking a look at today's 0 DTE, there are significant ITM positions. You can see just a sea of red here across here. I've highlighted the dominant gamma expiries for today. 4,300 to the downside, 4,400 is more or less where we're sitting at right now. Big spike, as you can see right there. We've got a long way to go before we even think about getting up into the zero and up into the transition. From where we sit down here, there just is not a lot of positive gamma coming off today. So could set up a monetization event. We don't know. Depends on how deep we go throughout the day and whether people want to start taking in some of these profits. If they do take in those profits, we could see a slingshot or a rubber band release to the upside. SPY, kind of the same thing, but note we are negative or to the left of the negative dominant expiry today at 440, so we want to make sure that you keep an eye on that. Crossing above that will take some of that pressure off. If we pull back even further, this is not a cash settled ETF, obviously. This is equity settled, and these people will want to protect those profits more than likely. Same thing down here on the Qs. You can see that we're to the left of the 340 strike, and that sets up that same condition. So now we've got a confluence of two major ETFs who are to the left of their dominant expiry. IWM, not so much. 195, as this has shifted down. You can see still net negative gamma, but not nearly the pressure that we're going to see here. So for that reason, we're going to color this yellow. Keep an eye on these key levels here for today. Market model. A couple things I want to point out here that I think are important. What you're looking for to go long is you're looking for this intraday. If you recall yesterday, I said if a reversal off the open typically fails, and that's exactly what we had yesterday. We see this all of the time. A reversal off the open just does not last for a number of reasons I won't get into right now. We had a failed rally attempt. We had another failed rally attempt, as you can see here. We are continuing to play the short side until we get this intraday reversal as indicated here. I just don't think it's going to happen today, but we'll see, right? We could get those slingshots that I was just talking about. I did draw some trend lines here. I want to show you the magnitude of the sell-off here. We call this a linear down, and you can see yesterday, these are parallel lines. The slopes are equivalent. I mean, there is serious risk off in the industry. For that reason, we're still in this red state. We're diving down. Transitions are down. I would not be going long on stocks right now. If you are hell-bent on going long, I would say sit on the sidelines until we get a stabilization, something that looks like this, and possibly start putting in higher lows, etc. Until then, I think playing the downside is the prudent thing to do. When we take a look at the vol and the VIX, we're in a area that's really difficult to play. We're pushing up into the standard deviations, but the slopes of these things are down on the VVIX. You can see here that we are forming an inside day relative to yesterday, but we're above the Bollinger Band midpoint, the 2020. And I also say that the VIX is elevated but in contango. And what that means is that the front month is lower than the second month, third month, etc. This is not indicating fear in the indices. So this tells us right now that there is not blood in the water and there is no panic, and we are, as you saw in the wing charts, we are well hedged to the downside. I think we just continue to grind ahead of earnings. And so for that reason, I'm saying watch for a reversal and a drop of the VVIX and the VIX. Watch for these to come down. If we see a lead here in the VVIX, I would be inclined to take something that could play the downside, take a spread or something along those lines. For that reason, still playing the red, but with a yellow cautionary in there. Little different presentation here. I'm adding the SPX structure analysis. This is becoming really important for us. The key thing to take away here is that the primary structure is dropping, and I give you some reasons here of why that can happen. Just take all these different lines mean something. The key indices here, or the key takeaway for you, is that when these lines are dropping, it's usually indicative of puts being added or calls being closed, and as we know, that is a bearish tendency. So right now, the primary structure, the $5.6 trillion structure out there, is seeing a net drop in these overall zeros, and as a result of that, we're going to color things red for the bulls and green really for the bears. Taking a look at the expiration, no real change from yesterday. We've got a lot of gamma coming off, or negative gamma coming off for tomorrow. If you don't understand what the implications of that are, we call those trajectories. Make sure you ask in the Discord. Pretty important, especially ahead of a 3-day weekend. When we take a look at the overall structures and what the price variant gamma structure is telling us, put a lot of numbers on here. Got some feedback that people want to make sure their eyes hit all the key levels. So first thing here, taking a look at the primary gamma combo structure, which is the AM plus PM, you can see that the 24 and the 5, this is 29% of the complex expires today and tomorrow. That's fairly significant, right? We're dealing with at least 1.5 to $2 trillion of money that has to change hands in the next 2 days. Very significant. Net negative gamma position, fairly significant, continues to grow to the downside. The rubber band is getting stretched to the downside. Very, very important. So when we take a look at that, to the upside, 4,500 has got a dominant level that you can see here, both in the delta as well as in the gamma levels. So we want to pay attention to the 4,500. It is nearly in the range, 2.3 to the upside from where we closed yesterday. 2.2 is the open high-low close that we're looking at here today. So this is barely out of range. Very possible. Don't fool yourself, right? Taking a look here to the downside, if that corresponds up here to the upside to the positive gamma exposure, the negative gamma exposure here at circle 5 is important, 4,300. You can see some transitions in delta, but net negative gamma all the way on down. Absolutely worth looking at, and look at the level. Again, it's right in that range. I don't think we're going to close at 4,300, but we could get a flushing ahead of tomorrow. Who knows? Your crystal ball is as good as mine. When we take a look all the way to the upside, 4,550, you can see that is the next positive strike. As price goes up, these will grow, but nevertheless, the structure is there. So I want to draw your eye to that. Taking a look here in the blue boxed area, as you guys know, this is where I usually make the transition zone. In this area, we have a couple transitions, zeros back and forth. The dealers love to hide there. The market loves to go park itself overnight there. So I would be watching these areas for sure as a local parking spot, and there's a number of ways to play those. We've talked about butterflies in the past, etc. So you may want to keep an eye on those, especially if we come down. You might want to YOLO on some butterflies up there. Taking a look at 8, it's where we closed. You can see the 4,400. We're just below that. Circle 9 here at 4,350. You can see there is a little bit of structure in here that we could pause at. If we lose 4,350, you can see where we could potentially stop all the way on down to 4,300. And in the unlikely event that we push below 4,300, which is going to be dominant, I could see us moving down very, very quickly, and you can see where the stopping levels are. The 0 DTE, Circle 1 just shows you that you are looking at a 0 DTE, 2 net negative gamma, fairly significant level. The COI is up here at 4,500 again. Note the 45 here, the 45 here. Look at the transition zones. They almost overlap here. You can see some zeros sitting in here. When you get a confluence of these zeros, it's very, very possible we could park there. Study this. Make sure you understand what you're looking at here, and you might be able to squeeze a pony out of there. Taking a look here, we've got the net positive expiry for today sitting here at 44.50. Looking down here, you can see the dominant level here at 43.80. As we push down below that level, now we're going to start building our moneyness, especially on the 0 DTE, and you can see the different stopping levels, and I've noted those, called those out for your eyes, 7, 8, 9, and 10 here. Again, below 4,300, it's just lights out, and I don't see us getting there, but nevertheless, you can see very, very little support. So if we do push down into this area, I don't anticipate going below the 42.95. But we will be heavily negative if we go down that far. Again, I'm not anticipating it. So, in wrapping up, what are we considering for the trajectories for today? We're watching all of that redness that we saw on the 0 DTE. Keep an eye on that. Run your charts in the AI channel on the Discord. VIX, we're not really looking at anything there in the VIX. We possibly a downside play, but I think we're too early. I think we could go either direction. Taking a look here on the cumulative market model, just continued weakness, but you guys should know what to look for. If you don't know what to look for, make sure you ask some different areas to look in here. We could see this continued weakness as exemplified by lower highs and lower lows. You know how to play that accordingly, and then you know how to play the converse of that. When we take a look at the lines in the sand, the cumulative tick is supporting the downside moves, and I think this is bearish until we get data that goes the other direction. Key levels that we're watching here, and then key levels in some different plays that I think different setups that we could watch here. So with that, I'll leave you. If you have any questions or comments, please join us at www.GammaEdge.us. That'll take you to a Discord sign-up page. Once you're in the Discord, you'll have 14-day free trial. All the tools turned on. Great group, great set of traders there. All experience levels. Really would urge you to come kick the tires. No risk to you, of course. Follow us on Twitter at GammaEdges with an S. Always helps to get pushed up in those search engines. And then, of course, you're watching this off of YouTube. If you like today's content, hit the like button. Please subscribe to us so that we can also get pushed up in the YouTube searches and compete favorably against that fishing line monofilament. All right, everyone, make it a great Wednesday. Have a good one.